Good afternoon, this is Bob Knight. It's the 22nd November 2016, and I wanted to talk about exponential moving averages, which I talk quite a bit about in my videos that I make, and a few people have asked me about them, so I put together a little information on it. This video, I want to thank stockcharts.com. That's where I got a lot of the technical information from, and also the software I'm using, Stocks to Trade. Put out by Timothy Sykes and his group. So what are exponential moving averages? They're a line on a chart that smooths out the price data, and it forms a trend following indicator. They don't predict direction, but they define the current direction with a lag. So they are trend followers. There's two main types, simple moving average, SMA, and exponential moving average, EMA. And I use EMAs because they're much quicker to react. And normally I use a 5 period and a 15 period, which are best suited for what we do, and that's day trading. The longer the moving average, the more it lags. So you'll see if you use a 10 period, it'll hug the price quite closely and turn shortly after the price turns. So you can imagine the shorter moving average is like a speedboat. It's very nimble and quick, where in contrast the very longer term ones are like a ocean tanker, which are very, very slow to turn. Now, the calculation for SMA and EMA, this simple moving average is very simple. If you have the 5 period one, you add the 5 periods together and divide by 5, and that gives you a dot on the chart. And then the next day, the 6th day falls off and a new one comes on, gives you another dot, and pretty soon you've got a line. So an EMA is a bit different because the first day is weighted by 18 on a 10 period exponential moving average. The first day is weighted by 18.18. So we put 18% more value on the first day, and then on a 20 period EMA, it's half the weighting of a 10 period, and on a 5 day, it's twice the weighting. So I'll show that here on chart Apple. The darker colored line is the simple moving average, and the gold colored line is the exponential moving average. So you can see that the EMA reacts much quicker than the simple moving average on these charts. This is a chart of Apple on Stocks to Trade. So that's why I use EMA, because it's quicker to react. Purpose of the EMA, well, a rising moving average shows that prices are generally increasing, vice versa for a falling average. And then where the two averages cross, that's called the double crossover method, and that is your buy and sell, that generates your buy and sell signals. The double crossover involves the shorter moving average crossing over the longer moving average. A bullish crossover is when the short moves up above it, and the bearish, obviously, when the shorter one moves below it. So here you can see the crossovers. This is CARA. C-A-R-A, a lot of people have been trading this lately. Here is a bullish crossover here where the EMA comes up and over top of the 5 one, crosses the 15 and trends up above it. Here is a bearish one where the 5 is above it and then it crosses below. And then, of course, the market goes down. So these give you the direction, and then this gives you the buy signal and the sell signal. The other signal is a price crossover, and that's a bullish signal is generated when prices move above the moving average, and vice versa for the bearish signal. Look for bullish price crosses only when prices are already above the longer moving average. So back to CARA. You can see here, like this one here, the price moves above, was below it, and it moves above the 15 EMA and above the 5 EMA. That's your That's your crossover, that's your buy signal. Here it's above it and it breaks down through it. That's your sell signal. Much the same as the two crossing over, the two lines crossing over. The next one is support and resistance. Moving averages can also act as support and resistance in an uptrend, and support in an uptrend and resistance in a downtrend. But it's not an exact science. Markets are driven by emotion, which makes them prone to overshoot. So really, the moving averages identify support and resistance zones. So again, the Cara here, the stock is, the price is above the 5 EMA, and you can see that it's holding, it's much like a VWAP. It's holding the price above it, and here where it spiked down, those are all supports. Here is resistance. This is support. This is no trend whatsoever. It doesn't give, when they go flat like that, it's very, it doesn't tell you anything. But here you can see it's resistance. Pops up here, resistance. This is resistance. Here, this candle here that's popping up, that's resistance. So the other thing that I also is important for me is how the EMAs, 15 and the 5, how they separate apart. When a 15 is rising and the 5 is rising stronger than that, it's a very strong chart for me. But they do get overextended, and when it starts to roll over, that really for me is another sell signal right there, and then it pulls back. On this one here, you can see the 15 is moving down, obviously that's bearish, and the 5 is moving apart, so that's a strong sell, strong bearish signal, and they're staying quite a ways apart. Then here where they start to flatten out, I'd be looking to cover if I was short. But this in here, even though it's after hours, it's not showing you any indication whatsoever. Again, here it drops off. The 15 is moving down, but the 5 is moving much sharper down. Very strong negative signal there. So, in conclusion, moving averages are trend following or lagging indicators that always will be a step behind. But the trend is your friend, and it is best to trade in the direction of the trend. Once in a trend, moving averages will keep you in, but also give late signals. Don't expect to sell at the top and buy at the bottom using moving averages. And here's the key point of all this. As with most technical analysis tools, moving averages should not be used on their own, but in conjunction with other complementary tools. So there you go. If you have any questions or comments, I'd be happy to hear them. Drop me a line. Thanks.